You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech insiders. I'm Chris Garabedian, and my co-hosts today are Brian Skorney and Sam Fazeli. For more information about our hosts and guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. We like to start a lot of these on just the market update, and finally, after many years, it feels like things have shifted, and that we're in a kind of a better news, better sentiment environment. Obviously, we've talked previously about the XBI breaking 100, staying there. A little bit of ups and downs, pullbacks, but nothing significant, and it's maintained itself. And the public markets are looking good. M&A is generally good. I'll speak a little bit about VCs, but Brian, why don't you kick us off from your perspective of kind of what you're seeing and how you would describe the current public market environment?
Yeah, thanks, Chris. Yeah, I mean, I think I've been saying this on the last couple of weeks for Biotech Clubhouse. It's really a optimistic, enthusiastic public market out there right now. I mean, people, and I was out marketing in New York yesterday, but across all my meetings recently, investors have been really upbeat. And I think underpinning this is the concept that this isn't just upbeat because we're in an uber bull market, but there's a lot of comfort out there that we're sort of in this upward swinging market right here, but without sort of crazy valuations and companies that are 4 years from going into the clinic, IPOing at $1 billion valuation. But we're still in kind of a lift off of the trough that we've seen, after multiple years of XBI underperformance. So, I'd say sentiment remains very high. I think there's an occasional mention of like, oh, is there going to be a shoe to drop, and like this, exuberance is irrational, and Trump is going to say something or do something, or something's going to blow up on a clinical trial side of things and take us down. But when you look at the last month or so, or even the last 3 months, healthcare has this month been one of the most net bought sectors, and biotech's exposure has really been pulling to 5-year highs. So we're thematically, we think that this is a realization of something that we've certainly been talking about, in that we've seen chasing of risk in other sectors, obviously the AI trade in tech that has pushed valuations to historical extremes, but biotech kind of sat it out for a really long time. But at some point it was inevitable that people would kind of think of this as a catch-up trade, given that it's a sector that historically has had the opportunity for kind of massive alpha capture,
Yeah.
certainly on individual names, and we're kind of seeing that in individual names. Whether it's names like Unicure last month, or even Praxis last week. You're getting these data sets where you're seeing hundreds of percent upside
Yeah.
on catalysts, and that type of thing cannot go unnoticed. And I think that's what's happening.
Yeah, absolutely. And I think one of the things that even in some of the data we'll describe on this call is that the stocks are reacting, good or bad, right? You're seeing good volume, good movement, and for a while we weren't seeing that, right? You'd see a kind of a sell off on good news if there was a run up, or like almost a fickle response to data. And here it seems like the market's becoming more efficient. I mean, would you describe it that way?
Um, I, I think so. I mean, some of it is right. Some of the data is upside surprise. So I think to some extent, like,
Yep.
right, like I mentioned, Praxis, like it wasn't just that it was positive data, which I don't think people were really thinking was going to happen with something that had a futility look go poorly, and they continued the study anyway. But it was like really positive data, like it
Yeah.
was every endpoint hitting. So it is sort of that like unexpectedness to the sector where it's worth nothing and then just becomes worth an enormous amount
Yeah.
because of
The
better than expected
undervalued.
data.
Yeah.
But
Yeah.
for sure, I mean, I think even on things that are potentially expected data sets, maybe arguably a little better than expected, you're still seeing stocks perform in the aftermath of that. And we'll talk about this in a little bit, but I think you also see that in sort of the follow-on offering environment as
Yeah.
well.
Yeah. And what's your take? I know the following's been market's been strong, but what's your take on how you would predict IPOs over? I mean, usually we'll see a flurry after disclosures, and definitely I'm interested to see what happens after the year end disclosures. I mean, we saw, I mean, the last, really push around IPOs in the early, 2021 timeframe. I just remember in that, February, early February peak. But how are you thinking about what we'll see with IPOs over the next, couple of quarters?
Yeah, so I think you're gonna see an acceleration. I mean, certainly, I mean, you're coming from such a trough in terms of IPOs, right? Like even a couple IPOs is all of a sudden like opening up the floodgates relative to earlier in the year, right? So, look, I mean, I think we went through this prolonged period where we had the a desert of IPOs, not necessarily because people weren't willing to invest in IPOs, although certainly the tolerance for public investing in IPOs was missing. But for fundamental reasons, right? Like we saw this
Yeah.
huge I would argue bubble into COVID, where you saw you know, banks were pulling companies from such early stages at high valuations. It was inevitable that when it kind of crashed down, you would wind up waiting for private companies to kind of catch up. And we're kind of at the catch up point, right? So
Yeah.
if everything IPO'd that was 3 years from the clinic 5 years ago, everything that didn't IPO now, you're getting close to the clinic, and that's where you have reasonable IPO potential when you're past early discovery phase and like nominating a drug in a big indication, or in phase one in a smaller indication. So
Yeah. I also
yeah,
think there was
definitely, I think we'll see more.
Yeah, I think there was nervousness too about not trusting the markets and knowing if you would trade down if you went IPO, even if you got a good price, at the launch, and how the aftermarket performance was going to be. And so I think there's also this increased trust and comfort that, the stock prices will hold, right? There'll be kind of better valuations that hold, maybe better price discovery like we saw with LB Pharma and their IPO. But look, I'm pleased as a VC investor that we're a lagging indicator to the public market sentiment, and that's true on the way down, and it's true on the way up. So we get very encouraged and much more comfortable deploying capital and even starting new companies and all of that when we feel there's a healthy IPO market, a healthier valuations on the public market. So I'm definitely seeing that trickle down. There's definitely more of a willingness to write checks, and I think we'll see more VCs getting more active moving forward if these kind of public signals hold. I mean, we've done 3 investments over the last 6 weeks or so: one device, one diagnostic out of the venture fund I manage, one therapeutic in the gout space, Crystalis. But I'm seeing the peer group really start to feel like this is the time we can start being comfortable deploying capital, and also the M&A environment has an impact on that too. So again, we're really encouraged. We're encouraged by the XBI. We're encouraged by, what the IPO market might look like. We're encouraged by, healthier valuations and not exuberance, right? Nobody wants to go back to what you were describing, preclinical companies going at a billion, because I think overall that wasn't healthy. But also the M&A environment's been good. So why don't we start off with kind of deals of the week, and let's start with a $2+ billion acquisition. You want to lead this one, Brian, for Avadel?
Yeah, absolutely. So Alkermes, which we cover here at Baird, my colleague Luke Herman's lead analyst on that. They did a $2.1 billion acquisition for narcolepsy drug, basically, from Avadel. This drug is Lumryz. It's an oxybate treatment. It competes, pretty directly with Jazz's Xywav, and they're expecting Lumryz to do between 265 and 275 million in revenue. In 2025, it's a growing product. They have a couple of label expanding studies that are ongoing, and certainly both Xywav and Lumryz have grown together. So I think every expectation is this is not a peak, but we'll continue to see some pretty meaningful growth for both products over time. But it's also a really interesting way for Alkermes to get a commercial foot in the door in narcolepsy. So Alkermes, many people will be familiar with the orexin 2 receptor agonists. Alkermes has one of the leads there in alixorexton, which is one of these in this hot new class. So it sort of has the benefit of creating something that's pretty near-term accretive to Alkermes but also builds out commercial capabilities for competing in the orexin 2 class. once we see alixorexton through phase three. So sort of that is a very interesting combination of both sort of spec pharma accretive deal, but also building into infrastructure and the commercial capability and showing confidence in their orexin 2 narcolepsy drug here. Certainly, seeing a multi-billion dollar acquisition. It's not a mega billion dollar acquisition, but is
Yeah.
needle moving for the sector, and I think just adds to the bulk of evidence that you're seeing more and more enthusiasm for paying for these assets.
Yeah, and I saw on Twitter someone made the parallel to. I think they talked about it last week, but a company we were investors in, Astria, got acquired by BioCryst. Again, similarly in the same space. BioCryst having a commercial drug launch, but also trying to increase their kind of footprint in the HAE space, and also kind of consolidate therapies. And so again, very very interesting to see companies really want to maintain a leadership position in specific indications. So, Brian, I think you and Sam have something to say on the Summit financing. Again, big, big follow on. You want to start, and then Sam, you can comment.
Yeah, so Summit did a $500 million deal. I mean, this is one of the most hotly debated names, and I know Sam's going to go into much more depth on some of their data that they had over the last week. But this is, the primary story here is their VEGF PD-1 bispecific. And look, the interesting thing here is the Summit management team. They are one of the more interesting management teams out there. A long time ago, I covered PCYC, which was really the CEO's kind of introduction to the biotherapeutic space, and wound up being one of the biggest deals of all time, and certainly one of the best products of all time. And is the basis of a really great book by Nate Vardy called "For Blood and Money." But Bob Duggan, the CEO here, he sort of has a history of doing this, of really putting his money where his mouth is. He's really quite unique in the world of biotech CEOs. In that all of his companies, he's really been the main financier to push their drugs through clinical development. Sometimes that's been less successful, but certainly in the example of PCYC, it's been enormously successful. And so far, Summit has seen a much greater valuation than the money he has put into it. So his basis is way lower, although basis is rising with this financing here. But it's certainly a bullish signal when you get a management team to put effectively half of the deal together from their own personal checkbooks.
Yeah, I mean, it's definitely another endorsement for Blood and Money. Just a great, great story for biotech with the pharmacyclics Acerta kind of battle, and Perceptive obviously it was featured in that as well as an early investor in Acerta. But yeah,
And
so
pharmacyclics.
yeah, right, exactly. And uh, so yeah, great. Sam, you want to comment on the Summit? And we're going to talk about the data from
Yeah, yeah.
ESMO in a bit. Yeah.
Just very quickly, that this is one of those situations where in pretty much every case, management putting money up into their own company is a bullish signal. It's just in a situation like this, when you have a phase three drug which has meaningful data behind it, you do wonder why they couldn't go and get more from institutional investors, or did they not want to get more from institutional investors? I mean, it's very hard for me to criticize Bob because it's such a successful story behind him. And of course, I've also read the book, and if anybody hasn't, we all get royalties of it, right? If anybody
Well, the
hasn't
fastest way to become a biotech billionaire is to have very big, concentrated
invested,
bets and
absolutely right.
positions.
Yeah, I
Yep.
mean, he's kind of literally proving the fact that he believes in this data. The thing is that we all need to see, and then as we come to it later, I'll do the bull and bear side of this data set that just came out and then talk about it. But yeah, so 50% coming from insiders, bullish, bearish, I don't know.
Yeah, yeah. I mean, I can tell you on the venture side, right? If I equate it to insiders as institutional investors, right? That's pretty common, right? When you have insider institutions doing half a round, right? On the venture side, this is private companies, right? So you have bigger positions and you want to take your pro rata, et cetera. But yeah, for a late stage clinical stage and that level of money, it's big. So yeah, it's hard to read the true courage of their convictions. How much of that was Bob Dugan's own money, and what is that in terms of his overall, net worth? All of that needs to be considered. But we're going to talk more about the data coming out of ESMO and the Bear and Bull thesis on that. Brian, some other updates on financings this week. Alto and
Yeah. So
Nurix.
So yeah, as I was kind of alluding to in the intro commentary, I mean, one of the things we're really seeing is really great performance on follow-ons. We're seeing a lot of deals get done, and I guess it's no surprise with like the XBI moving up and to the right. I would always advise management teams to take money when they can and pad the balance sheets to weather through harder days. But we've certainly seen a lot of success here. And what's really notable is you see a lot of after the fact success. So a deal will get done and then the stocks will appreciate immediately. We've seen that dynamic work a bunch over the last couple of weeks. We saw it work very well early this week in Alto Neuroscience. They announced a FDA meeting update that was positive for one of their programs, Alto 207. But really, the stock is now up 65% on the week. I think more coming off a subsequent $50 million pipe, and I think some of your colleagues, a lot of the biotech investors have gone on as named investors in this, and I think people buy it after the fact because one of the biggest pushbacks I'd get from clients over the last couple of years is how are these, even if I like this story, how are they going to get to catalysts here? I mean, these companies are going to suffer massive dilution. They can't raise the capital. It's really been a bear thesis on the sector, like no one's going to be able to finance. So now you're seeing a little bit of a reversal of that dynamic where when they do finance, it almost creates this FOMO where people are like, oh, I always liked the story, but I just didn't invest because like I didn't think they would be able to finance the company. Now they finance the company. So you see like good aftermarket performance on these names. And I think certainly with Alto, you saw that robust demand earlier this week. And you see it, across a number of names. We also saw a little bit of this with Nurix this week. There's another name I cover. They did a $250 million registered direct. It's up less on a percentage basis than Alto because it's a larger market cap. But you also had really robust interest. The knock on the story has been most people say, yeah, it looks like they have a really great BTK degrader in bexabrutideg. But how are you going to finance all the studies that are needed in CLL to kind of move this up lines when you're competing against a much bigger name like Beijing? And this is the answer. So people, it sort of created a much more positive narrative that they're able to finance and put up a meaningful amount of cash on a balance sheet from very well respected investors. I think this is a good signal for companies to if they could get a good contingent of investors to invest, and you could use additional money. Companies have done quite well off that dynamic
Yeah.
these days.
Yeah, I mean, I think, look, despite the overall XBI performance or whatever broad sector performance you want to look at, which hasn't been good for biotech for probably 10 years overall, it's a stock picker's market, right? That's what I'm hearing. Like you're seeing names where they believe it's going to work and they know that there's going to be good returns for that investment, and money's flowing into those names that get that good, specialty biotech investor interested. And I think overall it's what we've been waiting for and something that's healthy, for our market. Sam, there's also another strategic deal maybe you want to highlight, which is the other side of the coin for a healthy market is the financings, but also the deal flow.
Yeah, sure. So we had actually a China deal with the Japanese pharma company. So Takeda did a deal with Innovent, and it was a pretty hefty deal, $1.2 billion upfront. And about what the total bio dollars, everybody knows what that means, I think $11.4 billion. And of course, Takeda also invested in Innovent's shares at $100 million at a premium. So what's interesting here, of course, is that it's essentially an oncology deal. So you have a couple of late stage assets and then a earlier stage asset. And on the late stage asset, which is a IBI 363 PD-1 IL-2 alpha bias bispecific, It's a co-commercialization, a global co-commercialization, commercialization deal, and co-development. So that's pretty interesting. I haven't seen too many examples of this where the Chinese partner keeps some of the rights, and particularly they highlight the US side of it. So I think this is a way of the companies getting more international rather than just licensing out their drug or doing a new co. And of course, we've had data on 363 before. There was some data at ASCO, which I have to say was pretty exciting to us, at least in terms of the efficacy that it showed in lung cancer. So we think that's an interesting asset. Of course, there's a whole bunch of people who are after this way of trying to get the IL-2 back into the system to get the T cells motoring, for want of a better phrase. And here, bispecific is one way of doing it. The other asset is a Claudin 18.2, still around, so IBI 343 ADC. And then, of course, Takeda has taken an option also on IBI 3001, which is an EGFR B7H3 ADC. So a bispecific ADC there. We're seeing more of these EGFR 3, EGFR B7H3 type of bispecifics with ADC on them. And so this was a pretty big deal for, again, within the context. So we've just totted up our numbers for the year, and China has taken, this was a very quick analysis, so just to caveat that,
Yeah,
about 4.7 billion upfront in terms of 2025 so far, and total biodollar values of $84.5 billion. And of course, it comes hot on the heels, not so hot on the heels, but it was ASCO where Pfizer and 3S Bio, or just before ASCO, announced their $1.25 billion deal on the PD-1 VEGF that 3S Bio has developed.
that's great. Um, and what else we have? Did you want to highlight what's going on in Europe? You like to keep a pulse on that. A big deal in Europe this week.
Yeah. I mean, we like to talk about stuff that's positive in Europe. I mean, we've had a spate of times where people are writing up about how pharma is forgetting about everywhere and just investing all their money in the US, which of course is never the total truth. But nevertheless, we did have a very interesting a company that I saw about just under a year ago at a VC conference, Tubulis, that raised $360 million in a Series C. Now that's a pretty hefty number, certainly for Europe, and definitely, I mean, even globally, I think that's a pretty chunky number for a Series C. And it's an ADC company, which we don't seem to be able to get away from.
Yeah,
Their latest asset, TUB-040, is an anti-NaPi2b ADC, and we just saw some data for it at ESMO, which I have to say was pretty decent in in ovarian cancer. So that was a sort of response levels that you don't expect to see. 59% response rate on the overall dose ranging trial, and that was really pretty impressive again. So the question is now, do they have enough money to take this to phase 3? I mean, that's the plan essentially at the
yeah.
end. Maybe potentially lung cancer and ovarian, if I'm not wrong. And that then leaves us with the question of, is this a let's load up with cash and then go and partner situation where we can get a much better deal in a potential partnership versus going with it with coffers that are empty? But that's a really
Yeah.
good sign of success and support in
Sam,
Europe.
I didn't see the press release. Who were the investors, and do they have deep pockets to help
Yes.
continue investing? Yeah,
So I'm going to read it out.
yeah.
The round was led by Venrock, and then with participation from additional new investors, Wellington Management and Ascenta, and existing investors who also supported were Nextech, EQT Life Sciences, Frazier, Andera, Deep Track, Bayern Capital,
Oh,
and it goes on. I can
yeah.
mention them
So
all,
that's
but
a
it's in the
great, great,
press
great,
release.
great syndicate, and those who are going to figure out how to get that financed, right? If 350 million doesn't do it, yeah. I have to
No,
say, I
exactly.
looked at Argenx stock for the first time in a while, and it's over $50 billion. It's got a good year in value
Yeah.
creation. And so, and I just a few weeks ago, but just parenthetically, I was invited to do this panel at Bio Spain, which is a little bit like a Bio Europe. It attracts a lot of other countries to exhibit and do partner meetings there. and I was part of a investor delegation, both U.S. or ex-Spain and local investors. And I can tell you, in Europe, there's a lot of activity and there's a lot of like waiting for the market to improve. And it seems like over the last 3 to 5 years, they're just toiling away as best they can, waiting for the financial markets to kind of catch up to
Mm.
what they're. So I was impressed with what I saw going on in some of the European interactions I had at that meeting.
And Chris, on that point, I've always had this feeling that Europe kind of waits for 6 months, 9 months, 12 months to see how solid the recovery in the US is. Do you get that feeling still? Because you did actually use the word wait. Do you feel that they're all hanging, waiting to see whether the excitement and the resurgence of interest in US biotech
Yeah,
is going
I'm
to wash
I'm
over
I'm I'm
here?
being a little bit kind. I think it's partly necessity, right? They have to wait. So I think that as an investor, I can tell you that people want to seriously look at the technology first and be less concerned. This isn't true with every VC, but less concerned about where it comes from and who the management team is if they're capable. And there's a lot of good examples of great science and great technology being developed successfully, coming out of Europe. And so I think, and Brad Lonkar does a good job of kind of making biotech TV global in nature, and he does a lot of these kind of tours and showcases a lot of these companies. And I think that's a good thing for our industry. But when I say waiting, I think they're like waiting for the appetite for investment to tick up. And of course, U.S. is always going to be kind of the lion's share of that. Obviously, we're seeing China play a big piece in that, but I think Europe, they still have to compete for it, right? There's still a lot more that are not going to get funded the way they want versus those that get selected. But I think they're kind of waiting for investors to start to get interested. Now that's very different on the private side than the public side, obviously. But yeah, I think that all of the signs lifts all boats, right? All of these positive signals we're seeing, and I'm hopeful that all of the discovery research and basic research is not that expensive. So that's what I mean. They're toiling away. They can get stuff done and they can get ready for that 30 million Series A round or that 80 million Series B or et cetera. And I think that that's kind of what they're waiting for, is for people to have an appetite, if that makes sense.
Yeah, fingers crossed, it will come.
Yep. All right. Well, Sam, we're gonna have you take us on a tour de force of ESMO. We're a little bit of a skeleton crew here, so you're going to hear a lot from Sam at ESMO. But I think the audience definitely wants to hear the update. You were on the ground there, so maybe let's start with Summit, since we touched on that
Yeah.
to begin.
Yeah, and Chris and Brian, just jump in whenever you want
Yep.
to say anything on this. So obviously, Summit Therapeutics is, I mean, this is a massive conference, right? The ESMO, I think, was almost rivaled ASCO this year. Maybe not quite in terms of numbers, but it was certainly quite clear that there were a lot of Chinese companies presenting there, which I think partly is because the science is evolving and the programs are becoming much continuing to become numerous, but also because I think it's perhaps a little bit to do with the geopolitics at the minute. So anyhow, so Summit, which of course his drug was in license from Akeso. This is ivonescimab, which is their key drug at the minute, and pretty much mostly, although they've just announced that they're going to start a phase 3 in colorectal cancer in non-small cell. And this is the PD-1 VEGF, just in case somebody doesn't know, because it's been such a topical story for months now. Um, and it's Akeso who presented the Harmony 6 data, which is squamous non-small cell lung cancer in China. So it was ivonescimab plus chemo versus a PD-1 plus chemo. So you're essentially putting a bispecific, which brings in VEGF with it, versus a PD-1. 532 patients enrolled, median follow-up 10.3 months, and you got a pretty nice PFS difference of 11.1 versus 6.9. So that's great. Hazard ratio of zero point 0.6. I think we have to admit that's pretty good in essentially adding one extra mechanism of action here. AEs were manageable. Remember, this is squamous non-small cell, which has been historically something that people have worried about putting VEGF in because of some early bad experiences. And there was a clear effect across all PDL1s, even less than 1%. So this is the bullseye. That's quite clear. And I think for China, this is a very simple, easy signal. I think I don't know whether they need to wait for OS. We saw nothing about OS, not even a commentary about trends or anything, which is slowly bringing me up onto the side of this, i.e., what did we not get? What are the caveats?
Yeah.
So we didn't get any news on OS. Always a worry, given the history of VEGF, and I can talk about that a little bit, because you do wonder whether the VEGF effect is on the tumor response, on the tumor size to a degree, but doesn't translate to OS, which has been the case in many tumors with VEGF. And you've got that situation also a little bit with the Harmony trial, which failed to show an OS statistical significant benefit, although there was a difference. And the Harmony trial was in second line post EGFR in China again. So and of course, there was an additional patient group in the US, but the PFS didn't translate to a statistically significant OS benefit. So this adds that little question mark. And oh my God, are we dealing with another VEGF set of stories here? The Kaplan-Meier curves. Um, do you see a big drop just at around scan 3, which is always the thing again with VEGF? You get an early impact on tumor size on scan 1 or scan 2 or scan 3, and then everything is parallel. The lines are parallel. So I think the bulls would say, but some of the lines were not parallel and they were continuing to separate. But in this case, it was I would say that most of them are. And so that leaves you again with a worry that maybe this won't translate to OS. And of course, the hazard ratio was pretty much similar, irrespective of PDL1 expression. So it gives you this little nagging feeling. Is this all about VEGF? Is this just VEGF doing a lot of the work and not necessarily the PDL1? And then, of course, they did exclude patients with the risk of bleeding, as they should have, because there's a risk with VEGF in those patients. And then you therefore wonder whether this is going to be easily translatable and what happens to it when it comes to the US. So really, those were the positives, those are the negatives. The other thing that's happening is that we're continuing to see more and more PD-1 VEGFs, PD-L1 VEGFs showing up. We saw a new one in non-small cell lung looking good from Hubo Bio. Remagen had a good one in gastric, which we really like the data of. So the other thing that Summit needs to watch out for is who comes rapidly behind them. And lastly on this, and I'll leave you guys to comment potentially, is it seems to me that a lot of these situations with these bispecific, you do want to try and get a combination partner. And Pfizer with their 3S Bio, Bristol Myers with their BioNTech deal, and BioNTech itself, and even some of the Chinese companies like Remagen, they have a bunch of other ADCs like TROP2 ADCs, et cetera, to combine with. So that's what I think Summit also needs to get on with and figure out a way of doing more partnerships. They did do one with Pfizer, but then of course Pfizer went and did the 3S Bio deal. So
Yeah.
did you want to add anything?
Well, no, Brian, did you have any comments on the bull bear debate? I don't know if you're covering Summit or one of your colleagues does, but just any thoughts on this? Because it does seem there's different sides.
Yeah, I mean, I'm largely out of it. I kind of follow it out of interest,
Yeah.
and I know Bob and McKee very well. I know Mommy very well. So I meet with them
Yeah.
and every medical conference and try to get a hook on it. But I'm very torn on the bull bear debate. I think you just look at it globally and you wonder, is this really doing something different than if you combined Avastin and Keytruda? And B, does that even matter? Because no one's combining Keytruda and Avastin in any of these studies in a formal manner anyway. So just
Yeah.
even if it's the same thing, if you're successful, and you become the standard of care. But yeah, I mean,
Yeah.
it's a tough one to call, especially as Sam kind of reiterated. Avastin sort of has this weird ability to drive radiographic benefit that hasn't necessarily correlated in long-term survival, given the mechanisms. So when you're dealing, especially with things like PFS and overall response rate, trying to figure out how that predicts ultimate benefit to the patients can be quite tricky in this kind of dynamic.
Yeah, let me ask you both a question about oncology and especially new targets where kind of I feel like there's this phenomenon where you get kind of peak hype early, and then there's always kind of a slow right disappointment and or competition enters the fray. You guys want to comment on like is that a real thing where, and I'm thinking of CD47 or TIGIT or like that, there seems to be this excitement upon a new target in the first like positive data set, but it seems like the bloom comes off the rose over time. And would you guys say that, or is that just really just situation dependent?
Brian? Well, I'm happy to
I kind
go.
of think it's situation. I think it's situation dependent. Although I mean, certainly there is sort of this consistent dynamic of in biotech, you could get overexcited about early data, and then as reality sets in, it could be quite disappointing. But there's certainly examples where people get excited, and the mechanism or specific drug continues to generate that excitement, right? And I go back to PCYC. Like it was a battle on PCYC as a bull. People were like, "Oh, you're just overestimating how long these patients are going to be on it and how good of a drug it is." But it turns out, like I think if I look at my models from PCYC, I still wound up underestimating it as one of the bigger bulls. But you brought up like CD47, you brought up TIGIT. TIGIT's like super unique to me because we do have this tendency, and I would certainly argue, of like getting overly enthusiastic about like a single arm response rate study. TIGIT's like interesting to me because that's really one of the only times I can remember, a not totally rigorous, but somewhat rigorous randomized controlled
Yeah.
study showing like a profound benefit that just was never replicated
Yeah.
again.
Yeah, so look, I think I'm gonna remain a bull of TIGIT. We'll wait and see. You can shoot me down when we get to talk about it again when the trials read out. Certainly in the bispecific space, because IL-2 PD-1, TIGIT PD-1, CTLA-4 PD-1, these you could easily bring a good biological explanation for why you want those types of bispecifics, because you're acting on the same cell and you're taking away, hopefully, especially if it's conditional binding, or at least partly conditional binding, some of the side effect issues that at least some of these drugs have, like IL-2 and CTLA-4. So let's wait till it reads out. I mean, AstraZeneca. I had a excellent conversation today with Suzanne Galbraith, um, who will air as a podcast next week. And we didn't really get to talk about TIGIT because there was so much stuff at ESMO from them on breast cancer. I'm pretty much on everything, but we spoke about breast and bladder mostly. The thing is, that makes sense. You want to have these things binding on the same cell.
Yeah.
PD-1 VEGF, I don't know, right?
Yeah.
I mean, we do know that VEGF it has some checkpoint inhibitor. At least some people believe it's got some checkpoint inhibitor
Yeah.
checkpoint activity. So that's where
Yeah, and I
I
think my
think
point,
there's different.
yeah, my point was more on what Brian highlighted, which is the days of looking at a single arm, 15
Yeah,
patient study where the its early signal looks good. That I think there's skepticism of let's see a larger cohort over time
oh
and
sure,
persistence.
yeah.
But there was a lot of else going on at Sam at ESMO, so let's go through the list.
Yeah, so Exelixis was another one where the share price had a bad reaction to what I think initially. So I'm going to give you a bull and bear there as well. So this is the Stellar 303 trial, which reported that this is in colorectal cancer, third line colorectal cancer for zanzalintinib. My God, it's too hard for a Friday afternoon. With an anti-PD-L1 therapy. So what did we see initially when you look at it, which is why I think the share price had the drop that it did. Again, third line CRC. You had a toxicity that seemed to be more than Stivarga. You had a benefit, definitely 10.9 versus 9.4 survival benefit. Is that particularly exciting or not? And the OS benefit and PFS benefit didn't really go beyond benchmarks. You would believe that because it's a novel mechanism, it'll be obviously more expensive. And of course, it is an IV infusion. So these things, but particularly those two first points I made about efficacy and toxicity, I think upset folks for a little while. And then, of course, the share price has recovered. Again, I was lucky to have my friends from Leerink and Truist in the office on Wednesday, and we had a webinar that's on our I think I actually posted on it. So Andy Behrens was there talking up the bull story. So by third line, patients will most likely have had 2 lines of chemo already and not really be ready to take another one. So that's one of the issues that I think is particularly valuable here, because you don't need chemo in it. Doctors are eager to really identify the sorts of patients who will respond to IO therapy, Tecentriq in this case in Stellar 303. So to induce a durable response, because that's what the opportunity you've got here. And I think the folks that Andy, my friend, spoke to, but thought that they could take care of the Zanza tox, as they did with Stivarga. So, and it still performed well post VEGF agents. So really, this is, and I think the Bulls are winning here now post the conference, and I think that's probably the right place to be because of these facts that we talked about. So that was the initial reaction, and then the post reaction. So that was quite interesting to watch. But it was a pretty well designed trial, and the data was in the end compelling, I think, for at least some patients. It is third line, so that's a particularly difficult patient population. I don't know if you guys wanted to have any comments on this.
No comments.
No
What?
comments.
Yeah, you can go through the list.
Okay, all right. So the other thing that really interested me was Incyte coming into the KRAS G12D world, and this is a drug with Genfleet. It's a novel G12D. Remember, this is a space that's quite meaningfully dominated by Revolution Medicines with some very, very good drugs, which of course we've seen much data for. And of course, that's one of the stories that's been able to raise significant amounts of money, particularly for pancreatic. So here we had a data set that we think rivaled Revolution Medicines' zoldonrasib, and that was the G12D from Incyte. So what did we see? This is NCB 161734, right? Strong dose-dependent tumor control, up to about 86% at 1200 milligrams, 64% in terms of ORR at the 600 milligrams. And the response rates dropped since May for other competing drugs. So that's interesting, that was particularly for Genfleet's GFH 375. And that's at a lower rate of about 41% now since the early disclosure of that data set. So it's still impressive as a single agent. So the G12D space for KRAS is hotting up. We have the Incyte, we have Genfleet, we have the drug from Revolution Medicine, and I think at triple we'll see some more new agents that we haven't seen data for presented. So hopefully maybe next week, if we're still on together, we can talk about some of those. And so that really positions Incyte quite nicely. And if I don't know if you've looked at the share price chart, it's been doing, like a lot of biotechs, been doing reasonably well in terms of performance. And they also had a PD-1 TGF beta. So back to that story of bispecifics potentially giving us a much more uh, a better opportunity to get drugs that previously, I mean, TGF beta, I think a lot of people remember as a drug that GlaxoSmithKline had, that I licensed, that didn't work out, and it's been generally viewed as something that, as this monotherapy or as a single antibody, is likely to be more toxic. Here, toxicity was well managed, and it showed some very interesting data in a trial that they presented early stage, as Chris said. We have to remember that, but the tox profile seemed a lot more manageable, if not downright easy, relatively speaking, in a cancer setting, than you would have expected. So that gives them another interesting bite at a different molecule. So that's like the resurgence of insight from what we're seeing from these assets, and that was quite pleasing to see. And lastly, back to TIGIT. I'm going to just cover the TIGIT really quickly. We had some data from Arcus, which I'll have to say was good. So this was Arcus and Gilead's phase 2 Edge gastric trial, and this is domvanalimab plus an anti-PD-1 zimberelimab. Oh God! So Dom Zim, okay. um, and chemo, and they showed pretty good efficacy, promising efficacy in first-line gastric cancer, which is a reasonably sized market. That's a TIGIT. Remember, this is an FC inactivated TIGIT. And then, of course, we also saw data from AstraZeneca for tiragolumab from the Artemido-1 trial, not tiragolumab, that one's failed, that's Roche, sorry, from rilvegostomig, which is a bispecific PD-1 TIGIT. And that's showing some very interesting data. This was non-small cell lung cancer data. And I've done some numbers around it and compared it to Keynote 042. And I have to say, in both below 50% and above 50% PDL1 patients, the response rates look pretty good. But again, we need the phase 3 data to show us that this really works. And as I said, Astra has really put its weight behind this with, I think the last time I looked, unless some of the trials have been cancelled or not, but there were about 8,000 patients in the totality of these trials with rilvegostomig. So that's some confidence in this agent.
Yeah, and just Arcus, I'm looking at when they do these full data sets at an ESMO, the stock had run up like almost 50% over the last month and had grown, doubled over, the last year or so. And so it seems that people were anticipating that, Arcus, I'm just trying to dissect how the stocks react at a conference like ESMO, or are these already dialed in for the most part? I didn't follow every name that would be biotech that would actually move on presentations. But any comments on kind of what you saw in terms of market reaction?
Yeah, no. So I mean, look, I think so many people have given up on TIGIT that anything that's positive, um, it's a little bit like the PD-1 VEGF. So there's always people who go, no, it won't work. Basically, you go around talking to most physicians, they go, oh, I'm not sure if for instance, even ipilimumab got approved, I would probably use it in some patients. And then you look at the data and it looks great. And then you go and speak to people about TIGIT. No, that's not going to work. And then you look at the data, and the data looks good. I think Arcus in this setting with Gilead, they just have to end up go and prove that this does the job that it's expected to do. Remembering that Astra makes the case that you need to be bispecific. Arcus and Gilead are saying, no, you don't. We just do a single an antibody to TIGIT and an antibody to PD-1, PD-L1, and we'll be fine. So that's going to be quite interesting to see how that pans out. But, as I said, I'm a fan of TIGIT, and I think it's, and Arcus has really, and Gilead have both continued with this. Neither of them have given up. And this looks pretty decent in gastric cancer. And I think the share price is reflecting that some people are beginning to believe it.
Yep, yep. All right. Well, I'm gonna go through some of the data readouts that we had this week that were non-oncology, non presentations at ESMO. And Brian, I'm gonna ask you to comment on the first three here if you have any comments on any of these. But two of them were negative, and one of them was positive. So I'll go through them. The first one was Alector. And Alector had a dementia drug clinical study readout. This is a antibody, and I'm gonna butcher this too, Sam, like you on antibody names, latozinemab, but it's targeting the sortilin receptor for dementia. They have a partnership with GSK in co-developing this, and they looked at over 100 patients with frontotemporal dementia. This is a genetic-based target in the progranulin gene. They hit their endpoint on a co-primary of the biomarker of progranulin protein in the blood, but failed on the clinical component of the co-primary endpoint, which was slowing disease progression on kind of the battery tests they use for dementia. And they also failed to demonstrate any benefit on the other secondary or exploratory endpoints that are often part of these studies to really look at everything. And so, again, this speaks to the challenge a little bit of like accepting biomarkers without correlative or concordance on the clinical benefit. So this is one where they say, hey, it did what we said it was going to do, and we're seeing it on the biomarker, but we just didn't see the clinical benefit play through. They do have another antibody partnered with GSK, and it's targeting the same gene, but it has a longer half-life. And that's going to be reading out for a phase 2 study in early Alzheimer's that's expected to read out in the first half of next year. So we'll see how that plays out. But the stock was off, 50% on this news, Elector stock. And also, this is coming off a year ago they had another drug targeting TREM2 that was a failed study in Alzheimer's where they laid off employees. So, basically, besides being off 50%, they announced layoffs of half of their employees while they await the results from this other phase two in early Alzheimer's. Alector was one of these companies that is using a novel technology that binds to a unique region of the transferrin receptor. And this has been among a number of companies that people have been excited about this brain shuttle or brain carrier technology to shuttle these drugs across the blood-brain barrier. And so again, this has left the CNS space more excited. So again, another failure here for one of these transferrin receptor shuttling technologies to penetrate the blood-brain barrier. The second data readout was a positive one. This was Ventyx cardiovascular data with an NLRP3 target. This is a class that has gained a lot of attention. It's kind of anti-inflammatory drug for both cardiometabolic and neurological indications. Sanofi has a right of first negotiation on this drug, and this data set should trigger that. And we'll see if Sanofi acts. Interestingly, Sanofi acted on another Rofin. Actually, one of our companies in the type 1 diabetes space has Sanofi with a Rofin, but they had a Rofin on Vigil Neurosciences in the neurology space, again, which this drug could have some applicability to. This was a drug for Alzheimer's, which they acted on that Rofin earlier this year. And this drug also has completed a phase two biomarker trial in early Parkinson's disease with positive data. So, there could be some synergies there with Sanofi. So again, the stock was up, almost doubling on that news. And then the other data readout was Arcturus, and this was a failed trial, although the results were mixed. This was for CF. It was an mRNA inhaled therapy, and the stock was down over 50%, even more so, but rebounded because they were elucidating the idea that they're going to continue to move forward. So basically, they did a small study, again, rare disease, looking at 6 patients just over 4 weeks. And it did show restoration again on the biomarker on the CFTR protein. So it showed, mechanistically that the drug's working through its intended mechanism. But the clinical data on the key lung function, FEV, this is forced expiratory velocity, did not meaningfully improve. So again, the stock was down over 50% on the news. But the company showed some, subset analyses in their press release. They showed 4 of 6 patients had mucus plug reduction. They had some imaging analysis that they revealed. And more importantly, they are looking at 6 additional patients at a 50% higher dose. They looked at 10 milligrams dose in this study. They're looking at a 15 milligram dose with an additional 6 patients. And they say they have plans for a larger 20-patient study that is going to look at a longer duration of treatment, 12 weeks instead of 4 weeks. And that's going to begin enrolling in the first half of next year. The thing I like about this is that this is um, indicative of the activity in investing and also pharma interest in just non-oncology and these other therapeutic areas. We had here's one's an antibody, one's a small molecule, one's an inhaled mRNA, and you've got CNS represented here. You got cardiovascular represented. You got rare pulmonary represented, and these are all areas that have heated up in recent years for interest in pharma. And so again, not all these readouts are positive. 2 of the programs are continuing to move forward, one with positive data. So overall, again, it's just encouraging to see, coming out of ESMO that there's just a lot of activity across these other therapeutic categories. I'm going to speak about Moderna in a minute, but Brian, any thoughts on just these readouts? And again, this is what I was saying up earlier: is the stock movement is pretty robust on some of these. Maybe surprises on the upside or downside, but any comments on any of these data readouts?
I would just kind of, generally say, like your point on sort of the diversity of both the different indications and different mechanisms. You look at the Alector GSK failure, and look, I mean, this is an evolving space where we're seeing more and more action in trying to get drugs to hit targets across the blood-brain barrier. Obviously, there's been a number of companies specifically gone public on sort of that platform hypothesis. And it reminds me a lot of like the beta amyloid history, right? Like solanezumab was targeting amyloid, but it didn't really cross the blood brain barrier effectively, and totally failed study after study. And it could have an impact on sort of blood amyloid, but it was not hitting plaque itself. And we saw the evolution of drugs getting better and better at getting across that blood brain barrier to target plaque. And now we have two drugs that do that effectively, and have led to improved clinical outcome, even though I think people are disappointed versus what the hope originally was. But I think this is the sector, right? You're working through a process to get better and better at identifying targets. CNS is a very hard area to really understand the pathophysiology, and certainly to get to the target. And the mRNA CF study is similar. We've seen a lot of attempts to get delivery of mRNA. Well, not just to the lungs, but
Yeah.
even systemically for broader protein expression, that have not been successful. But companies are continuing, right? Like, you think 20 years ago, everyone was knocking like Alnylam and RNAi, and
Yeah.
how difficult it was to really get proof of concept. And now, we're sort of there, and it's hit prime time. So, I think these things will eventually get there.
They
I'm not
take
going to,
time. Yeah.
specifically pick the stocks that are going to do it. So, it's a little bit disappointing that we're not there yet, but
Yep.
they'll keep trying, and they will get there eventually.
Yeah, and speaking of mRNA, so Moderna had another readout. Their CMV vaccine failed their phase three. This was a study that failed in women aged 16 to 40. This is the most common infectious cause of birth defects. And so that study, they previously announced that they weren't seeing enough cases in an interim analysis, which had the market kind of handicapping this study, and it was perceived to have a low probability of reading out positively. So it wasn't too much of a surprise that it was a negative readout. But they are also ending the development in congenital CMV as a result of this study failure. But they are continuing with a CMV study with the same mRNA drug in bone marrow transplant patients. The company described it really as a completely different goal in preventing reactivation of CMV during immunosuppression, since most of these patients either have CMV when they go into transplant, or they get it during the transplant. So they think they have a higher probability of reading out positively in the transplant population. But again, with mRNA headwinds that we've seen, these. One with mixed results and one failure. Again, as Brian said, it's going to take some time to truly develop these more favorably for other applications. And Moderna has really, re-highlighted their cancer applications for this. Sam, any other comments on mRNA technology?
No, just to add, I think where we've seen success has been in the respiratory space, and I don't think it's specific because it's respiratory disease such as COVID, RSV, flu. I think it's because it's seasonal, and you give it right at the right moment, at least for an antibody, and then of course for the T cell response. So I just wonder whether in these chronic infections like HBV, etc., it might be this technology might have a tougher time.
Yep.
I don't know. I really need to sit back and think it through and talk to a few virologists or vaccinologists to think it through. So it just made me start worrying about whether the CMV readout is something to do with with that issue, and that's the only thing
Yep.
I would add. But now I think they're slowly trying to make themselves more of a cancer company. And of course, the difference here with biotech is biotech's gone into a whole variety of places with antibodies and ADCs, bispecifics, etc. Whereas Moderna is sticking to its guns with mRNA, and I think the proof of the pudding will be in 26, 27 as the data starts to flow out.
Excellent. All right. Well, look, we're at the time. I want to thank both of my co-hosts. It's harder with three. We all have to do a lot more talking and cover more data. But I thank you both for kind of managing through the hour on that. And thanks to our audience for tuning in to this episode of Biotech Hangout. And we hope to see you all at the next one.